So, what are the steps that you should consider, or what should you be thinking about before you start implementing the velocity banking strategy or any other strategy for that matter? I know there's the strategy out there, the debt snowball as well. So, listen, the important thing is not the strategy that you use. The important thing is that you set a plan up, you educate yourself on what you want to do, and once you have that plan, you stay committed to it no matter what, right? So, I'm teaching specifically about the velocity banking because in my case, the velocity banking really has been a game changer for me. I have paid out over $100,000 in debt over a very, very small course of time. And I know by firsthand that this information is not available to the masses, especially as I worked in the bank. I didn't see this at all. So if you go to the bank, they will talk to you plenty about getting a loan. But remember, when we do a strategy like velocity banking, we don't use loans, we actually use lines. So if you are ready to start taking that step because you have watched my videos or others' videos and you are on the fence and you really don't know exactly where to go next, I just want to highlight some important steps that you should take before you start velocity banking so that once you have the process up and running, you'll have the maximum success as possible. So the first step and the most important thing is establish a clear goal. Why do you want to pay off your debt? And I'm not just talking about the reason that we all want to do it. Oh, I want to have more money in the bank account. No. Why do you want to have debt paid off? Do you have children that are depending on you and that your spending habits and that your being in debt is directly impacting the chances of them being successful later on in their years, right? Is your being in debt serving as a hindrance to the future of your children? Is your being in debt possibly serving as a hindrance to maybe having to work two jobs, either yourself or having a family having to work two jobs to possibly now being able to maintain a household with one income, and now the other parent can dedicate themselves to raising your children and you don't have to pay someone hundreds and thousands of dollars even outside of the home to raise your children that in most cases are not even going to raise them the way you would like for them to be raised. So figuring out a goal is probably the most important thing of why you want to pay off debt. So let that goal be something that really is it speaks to you, really hits you at your core, and it's just not something. Okay, I want to be out of debt because later on I'm going to get into bigger debt or more debt, because that oftentimes, if you don't have a clear goal established, is exactly what happens. You get out of debt, a year goes by, 2 years go by, a year and a half goes by, and guess what? Because you didn't have a clear goal, even though you started to the debt pay down process, you find yourself right back into more debt, or either the same amount of debt or even more debt at times. So again, not throwing stones, but I had it happen to me before in the past, and so I want to help you avoid that. So having the clear goal is of the essence. Okay. Number two, get organized. And what I mean by that is you have to identify any and all issues in your own personal economy. And sometimes that's going to take you looking over 1, 2, maybe 3 months of bank statements and find out exactly where your money is going. You need to really identify what are the leaks, what has been hampering you, why has it been so difficult for you to pay off debt. Maybe your money is being dedicated or being placed in other areas that you're not even aware of. I'll give you an example. A lot of times, gym memberships are just eating away at your money. Subscriptions, they're eating away your money. Overeating or going out to eat, multiple times throughout the month. Guess what? That's eating away at your money. So if you can cut back in areas, instead of eating maybe 3 or 4 times out during the week, hey, make an extra meal with you during the week and take that to lunch. All right. Maybe you have to cut back at lunch at work. These are just simple things that can be done, but you really need to get organized, identify the issues, find out where the leaks are in your personal economy, so that when you start to put this process together to you, you're going to be able to maximize the cash flow that you're gaining, and you're going to be able to really enjoy the results that you are having by putting this process into place. Now, number three is equally as important as number one, but you need to know your four numbers. What are those numbers? The four key numbers are income. Income. What is an income? Income is anything that you earn, whether it's from your W 2 employee, whether it's from a side hustle, whether you're getting paid cash, whether you sell something on eBay or on Amazon, whatever it might be, anything that's coming inside of your own personal financial economy, that needs to be noted as one of your four major numbers. And it all starts with income, right? Where you're getting income from is going to help you determine exactly how you structure when you start to attack your expenses and your debt. The next thing is expenses. And what I mean by expenses is everything. So you have on the income side, everything that's coming in. On the expenses side is everything that's going out. So I mean bills, I mean utilities, I mean gas for the vehicles that you may have. I have subscriptions, right? Giving, any giving that you do to charitable contributions to church. If you give to a cause that you're really passionate about, you have to know exactly where the dollars are going on a monthly basis in terms of expenses, food. So all those things you really want to find out where my money is going. And as I work with clients, that's one of the areas that most people struggle with because they really don't have a clarity on where their money is going. So looking at the leaks, right, going through those statements helps, and then it helps identify exactly where your money is going on a monthly basis. The next thing is, right along with the statements, is debt, right? Gather all the debts, all your loans, credit cards, gather them up, right? If you have online statements, look online. If they go mail to your house, gather all those credit card statements up. If you have any other loans, gather all those loans up. Find out for each and every single debt that you have, credit card, loans, what's the interest rate on each one of those debts that you carry, right? What is the loan term, right? There's many clients I speak with, they don't even know the interest rate that they have on their mortgage or on their loan, and they don't know the term. They forget how long the loan was for. And I know it might sound like something that's comical, but as life goes on and you're taking care of kids and the years pass by, it slips your mind. So again, once you're strategizing, you're going to start this process, right? You've gotten to the point where you think you're ready to pull the trigger. All these things are important, right? Because again, I want you to have success when you start to implement the strategy. Now, the last of the four numbers that you should know is your cash flow. Simple way to keep that in mind is cash flow is what is left over at the end of the month. So after all the income has come in, all the bills, and I mean everything has gone out, what's left over, right? That's the key number because that is the number that is going to determine how quickly, right, we are going to be able to leverage that cash flow to pay down your debt. All right, moving right along. Number four is identify your line of credit. Once you have all these other things taken care of, now we can look at identifying what's going to be the right line of credit for you. As an example, if you're a homeowners, you can use a home equity line of credit. Once you know that you qualify for a home equity line of credit because you're a homeowner, then you have to decide, are you going to do it in the first position or are you going to do it in the second position? They both will give you the same results. Just how efficient they are may be a little bit different, right? I personally like to work with first lines of credit, right? Because in my opinion, the first lines of credit, they make more cash available for you because now you release yourself from a mortgage and you get the money that you're setting aside for the taxes and the money that you're setting aside on a monthly basis for the insurance, and you're sending it to the bank. You actually get that money up front, right? You get that back into your personal economy. You can use it during the month, and when you need to pay those two bills, then you send it out to the tax agency, and then you set it out to the insurance agency. And in many cases, you only have to do that once a year. So that's why I like doing in the first position. But again, you want to know that, right? You may, if you don't have a home, then you may qualify, or you may need to consider looking into a personal line of credit. And if that's the case, Do your research. There's a lot of banks out there and a lot of credit unions that are offering personal line of credits. Many of them have 6 months or 12 months introductory periods where the interest rates are actually low. Remember, we are in an environment right now where interest rates are either halted or they're dropping. And a bank and a credit union, in order for them to keep their doors open, they must lend money. And they are going to be looking and trying to get customers in their doors to enable to lend money. And they're going to use promotions to be able to do that. So keep that in mind. And finally, the last thing I will say is you need to know what your credit score is. I talk to a lot of people, they don't know what their credit score. Usually, the banks will use the middle score, right? You're going to get 3 scores show up on your credit profile. They're going to take the middle score as a good range as to how your credit is stacking up according to the profile that they need in order to be able to approve you for a certain line. So some banks will use TransUnion, others Experian, others Equifax, but that is something that you could find out before you actually apply for your line of credit. You can decide what bank you want to do it, or you can decide what credit union you want to do it with, and then you get online, do your research, or give them a call and say, "Hey, I'm interested in this particular product. I want to go ahead and make an appointment, but can you give me an idea what the interest rate would be?" And most of the cases, when you go online and you put in the details of what it is you're looking for, you'll get exactly that information. You have a really good indication of what your credit score is that you will need and exactly how that will apply for the particular product that you're thinking about getting. So I hope this information really helps you today. Again, we are heading in the general market a time that you hear a lot of negativity out there. People are scared of tariffs, and people are scared of increase in inflation, and so many different stories. The best person to take care of your finances is you. And I believe in you, and I know that if you apply yourself, set these goals, right? Get organized, know your numbers, identify what the line of credit you want to use, and find out what your credit score is and what you need to improve. I know without a shadow of a doubt that you'll be able to fulfill all your goals and have financial success. So I look forward to seeing you in the next video. Thank you so much for tuning in today. Have a great day and God bless.